Excellencies, ladies and gentlemen, Assalamu alaikum wa rahmatullahi wa barakatuh. It's a pleasure for me to participate in this prestigious Sudan Fintech Summit. My special thanks to the Sudanese authorities and the organizers for inviting me and for the good organization and the interesting program. In this session, I would like to discuss with you few pointers about financial inclusion and the benefit of digital banking platform in terms of widening this financial inclusion and making basically the customer experience more interesting for all stakeholders. First of all, in terms of definition, all of us agree and you are all aware that its simplest and most straightforward definition, financial inclusion means that customers have access to useful and affordable financial products and services that meet their needs. Financial inclusion strives to remove the barriers that exclude people from participating in the financial sector and using these services to improve their lives and being a player in the overall economic and development activity. Financial access facilitates not only day-to-day living for people, but it helps families and businesses for everything from long-term goals to meeting unexpected emergencies. In terms of benefits of financial inclusion, there are two core benefits. The first one relates directly to revenue generation and improving basically the financial standing of an individual or of a business. And this is really in terms of getting access to financial services and products in an efficient and cost-effective and smooth manner, basically. The second core benefit relates to the social dividends, basically, and this is very important and key, that are generated as a result of providing vital financial services such as business loans or mortgages or pension, particularly to individuals and small businesses. This makes of them a player and a stakeholder in the economic activity taking place in their countries or their communities. Enabling small businesses and individuals to become financially inclusive, it definitely stimulates the wider economic participation in a specific country and globally. Conversely, the cost of remaining unbanked to both countries and citizens alike is high. It constrains access to essential financial products and exposes individuals and businesses to unnecessary and potentially avoidable risk by not being connected and being a player in the economic activity that is taking place in their community or country. But we all agree that despite all efforts made by the various stakeholders, many people are still unbanked. And these are in particular, I would say, fragile segments of society, either the poor people or often women. We should recognize that great strides have been already made towards financial inclusion. For instance, today, about 1.2 billion adults worldwide have gotten access to an account since 2011. And this is thanks really to the efforts of governments, private sector, and multilateral institutions that have really facilitated and encouraged financial inclusion. As per the latest figure, 69% of adults have already an account. But still, despite all of these efforts, we still have about 1.7 billion people that are still unbanked. And as I have highlighted earlier, among these are the most fragile segments of societies, i.e. the poor and women. The challenge remains really for the stakeholders and the banks alike is how to move basically from access to an account to the usage of an account. And this is very important basically factor. Many countries relied on reforms, private sector innovation, and a push to open low-cost accounts, including mobile and digitally enabled payments to ensure greater inclusion. Today, much is said about digital banking platforms and how these really they can improve a greater financial inclusion and also make the customer experience much more, I would say, enjoyable. There is no doubt that digital banking platforms have shaken the banking industry by reducing transaction cost, widening market participation, and opening new horizons for traditionally unbanked people, in particular in rural areas. However, the core consideration when catering for the unbanked still remains accessibility. Understanding how to design and develop intuitive digital banking products and services whereby accessibility sits at the core of each initiative is critical to success. In the past 20 years, there have been a gentle transition away from physical bank branches increasingly towards online services, either delivered directly or through intermediaries. More recently, mobile technology has played a crucial role as an alternative means of distributing banking services based and at a substantial scale. Developing physical banking infrastructure is expensive, and this is a key factor in the adoption and evolution of web and mobile-based banking services and applications. The key aspect to consider here is the fact that when banking and financial services are difficult to obtain or access, the rate of engagement starts to drop off dramatically. And this is true for both physical bank branches and digital banking experiences. One key element for banks to contemplate when tapping into the unbanked opportunity will be the ability to load mobile experiences quickly in locations where access to Wi-Fi is non-existent or extremely poor. In some instances, there will be zero Wi-Fi, especially in rural area, and users will have to rely on cumbersome cellular networks, which means that the digital banking experience, be it native applications or responsive website, needs to be designed and developed in a lightweight manner to ensure rapid page loading times. These considerations will help to remove friction and frustration from the overall user experience and enable unbanked customers to perform vital activities in relation to managing their finances. Definitely, we all agree that accessibility is one key factor in terms of engaging the unbanked, but it's by no means the only factor. Product design as well is a crucial factor basically. For the unbanked, engagement relies heavily on financial products and services being developed in the right way, which means removing some of the traditional barriers which might be in place for mass market banking customers in developed economies. This means developing services at the right price point is very key, and not making product very expensive for unbanked customers to leverage. This also means that acceptance criteria, regulatory and administrative policy should adequately reflect the unique circumstances of unbanked customers. This could mean enabling account setup for unbanked customers with no fixed address, historic credit score, or banking history. Banks and financial services companies must decide what constitutes an acceptable level of risk when it comes to onboarding unbanked customer who may be perceived as a commercial risk based on an absence of credit score or prior financial history. One of the key challenges here is for banks to overcome traditional operating priorities and legacy operating models. Providing an attractive banking experience that's accessible and easy to use is fundamentally important, but catering for the unbanked population requires the ability to adapt existing business models and calculate how to deliver vital products and services in a profitable way and extreme scale, while moving faster and more efficiently than the competition. In conclusion here, a few takeaway points basically. We could summarize by noting that countries that have achieved the most progress towards financial inclusion have done a few things in common. First is delivering policies at a scale such as universal digital ID, for instance. For example, in India, Aadhaar and GDY accounts resulted in more than 1.2 billion citizens covered, and this is really a commendable achievement. Leverage government payments. For example, 35% of adults in low-income countries receiving a government payment opened their first financial account for this purpose. 3. Allowed mobile financial services to thrive. For instance, in sub-Saharan Africa, mobile money accounts ownership rose from 12% to 21%. 4. Welcome new business models such as leveraging e-commerce data for financial inclusion and a better customer experience. 5. Took a strategic approach by developing national financial inclusion strategy (NFIs), which bring together diverse stakeholders, including financial regulators, telecommunication, competition, and education ministries. 6. Paid attention to customer protection and financial capabilities to promote responsible, sustainable financial services. Looking forward, retail central banks' digital currencies (CBDCs) can help remake the financial system into one that is more accessible to the unbanked and underbanked in a similar fashion. Also, we should really leverage on the adoption and acceptability of going online that was accelerated, especially during these COVID context, whereby governments and customers alike, they have given much greater attention to being online and accessing services online. So all of these are really factors that are favorable towards adopting digital banking for greater financial inclusions. Excellencies, ladies and gentlemen, many thanks for your attention, and I wish you good luck and interesting session in this summit.